What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we see the bear raid has begun as we're starting to see very sharp rejections from resistance yet again. With tomorrow's CPI data, do the bulls have what it takes to fight back, or are they going to allow the bears to continue to push lower? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today in SPY we were down 2.06% as we did get that sharp rejection from the 50 EMA, and the price action is back down below all the moving averages, and we lost that critical support level at 378. So remember, this comes by no surprise because I've been telling you this is still a bear market with a sharp high volume rejection from the critical risk level that the bear lives at 390. Tells us the bears are still in full control, which means we're expecting lower highs and lower lows. Now with the bears pushing lower, remember there is very likely a chance that we're going down to retest the lows, but I do want to remind you that the Bollinger Bands are starting to squeeze and the market has gone absolutely nowhere for many months now. If you just draw a horizontal line and zoom out, we are still trading back at the levels we were back in June of this year. So if you were holding since June, the market technically has gone absolutely nowhere for you. So one thing you need to understand, when the market has been this flat, relatively speaking, month over month, we've gone nowhere since June, there's very likely going to be a very major breakout in the near future, and that is why the Bollinger Band squeezing on the daily chart is significant. So one thing you need to understand is that if you are trying to get bullish on this market, you need to wait until the bulls can push through the resistance trend line and defeat that bear at SPY 390, and there's still going to be plenty of room to the upside once that occurs. I want you to understand that concept because there is no reason to be bullish while we are in this downtrend. You are going to have plenty of time to react to a bullish breakout and still get long on this market. If there is indeed going to be a bull breakout, you need to let the bulls prove it to you. So don't have FOMO. Tomorrow is CPI data and there's likely going to be a very major move after we see that report, but you are going to have time to react to it. So just sit back and watch the price action and let the price action do all the talking. Right now, the bears are in full control with two high volume rejections from critical resistance. And if the CPI data comes out bad, the bears are going to continue to push down towards this next level at 364 and then a retest of the lows at 358. So just sit back and follow price action, and there is no reason to be getting bullish while we are below this resistance trend line, which right now you can call that level right around SPY 384. So you're either risk off sitting in cash or shorting the market while SPY is below 390, waiting for a confirmation of a bull breakout, expecting lower highs and lower lows until the bulls prove otherwise. On the Nasdaq 100 triple Qs, we were down 2.31%, and as you can tell, the triple Qs got their price action rejection from that 20 simple moving average of resistance around 271 to 272. And you can very clearly see this is starting to look like a lower high before the next lower low, or at least a retest of the previous lows at 260. Remember, the bulls have everything to prove and the bears have control of this market, so the triple Qs bulls will need to push through 271 and then the resistance trend line at 275. Price actions below all the moving averages, we have the full bear trend and we have lower highs and lower lows. And we cannot say that this is going to be a double bottom until we get a breakout back over the neckline, which is all the way up there between 282 and 284. So don't be fighting the trend for any prolonged period of time. It's clearly still a downtrend. And if we do break down to new lows, we do have the next price target down there just below 250. On the Dow Jones, we were down 1.92% today, and as you can tell, the Dow Jones is starting to see selling from that critical resistance trend line, which was that resistance at 333. We're back down towards a pretty critical support level, which is going to be this 200 simple moving average and support zone around 324 to 325. If the bulls lose that support, expect a push for the bears back down to 319. And then below 319, the bears will try to fill this gap at 311 and retest this risk level of breakout at 312. So while the Dow Jones is below 333, expect lower prices, but you do have to watch each of these support levels because if you're trying to short the Dow Jones, those are going to be the levels of interest that the bulls may try to step in at, which means you need to be managing your risk as you come into support levels and taking profits, or waiting until we get a bull breakout above 333 to take your losses. On the Russell 2000 IWM ETF, we were down 2.75% today, and as you can tell, the Russell 2000 is leading the way lower because today we did get another daily closing low, so this is very clearly lower highs and lower lows forming in the small caps, and the price action is back below all the moving averages, and we did break down below the neckline at 176. So this double bottom is looking less and less likely while the bulls are losing support. Remember that double bottom had that price target at the gap fill at 188, but it did require to hold above the neckline at 176. And right now the bears are pushing through that support on higher volume. The next downside support zone is going to be right around 166 to 169, and you need to be risk off in the small caps while they're below 176. Above 176, you're looking for resistance around 178 and 180, and you're not getting bullish until the bulls can break above the previous daily high. On the ARKK ETF, we were down 6.54% today, and ARKK is getting absolutely obliterated in this bear market with another 52-week closing low and breaking below this support level at 33.7, which means we are very likely going to start trending down towards $30. But I will caution you that we are selling off on very high volume, so there is always the possibility that we are already reaching capitulation and we don't actually need to go as low as $30 before we run out of sellers. Now that's impossible to know for sure, so that is still the price target while we are below 33.7, and as you can tell, we are also getting a little overextended below the lower Bollinger Band. So to keep it simple, you are staying risk off while we're below 33.7, and if you want to get bullish, you really need to see ARKK getting back over this resistance level right around 36. On the VIX, we are up 2.15% today as we continue to see the VIX bouncing off of this support level at 24, which is going to favor more selling and more fear coming into the market. And if you are a bull, you want to see the VIX getting rejected below 28 and then coming back down and breaking below 24 to tell us fear is leaving the market. However, that's not what we're currently seeing, and right now the VIX is bouncing off 24 with the severe risk of a bad CPI report driving the VIX back up towards 28 to 30, which is obviously going to be a very volatile sell-off. So just be cautious while the VIX is elevated, and it does look like we could continue to see the VIX rising in the short term. On Bitcoin, we have more trouble in paradise yet again, with Bitcoin down nearly 15% and getting absolutely obliterated way below the lower Bollinger Band on extremely high volume selling, and we sliced right through that price target at 17,200. Now from here, without a doubt, this looks like a typical flash crash in the crypto market, which is usually going to end up being a buying opportunity, but you do need to be cautious. With high volume selling, there could be more downside. So I will give you another price target today to watch for, and that is going to be right around 14,395. Below that, we're very likely going to get to our full price target to the downside at 12,000. But in the short term, because we are seeing capitulation, we could see a very volatile bounce off of any of this support around 14,000. Now, obviously, this is not something you want to be stepping in front of as a bull, because this is clearly a falling knife scenario. So if you are buying Bitcoin at these levels, make sure that you are an investor accumulating for the long term and you don't mind holding it for at least 2 to 3 years. If you try to catch a falling knife, you're usually going to get cut because this could continue to fall. So just be aware of that. The next upside resistance now is going to be right around 17,000, and that support level we lost at 19,000. On Amazon stock, we were down 4.27% today, and we see Amazon did break down below our price target at $88, and we are still seeing relatively high volume on this selling, and we're seeing the Bollinger Bands are continuing to expand, allowing us to continue to go lower. So with this free fall look at Amazon, there is another price target down here all the way at $77, and that is a valid price target while Amazon is below 88. The bulls will need to get Amazon back over 88 and then back over 92 for the attempt to push back up towards the resistance at 102, but this is clearly a downtrend while Amazon is breaking down and closing below 88. On Microsoft stock, we were down 1.91% today, and we can see we're getting that rejection from that resistance right around the 20 simple moving average at 232, and we did close below the support at 225, which means we could be heading lower back down towards 219 to 215. The Microsoft bulls will need to get back over 232 to 233 and then break this resistance trend line, which is right around 240 to 242. Nvidia was down 5.66% today with that rejection from the bottom of that gap fill, which was just below 150. We lost the support at 145 and we're coming right back down towards the 50 EMA of support at 136. Nvidia bulls will need to hold this support zone between 134 and 136, and if we lose 134, we'll very likely come down to the 20 simple moving average at 130 or retest this support zone at 122. On Tesla stock, we were down 7.17% today with a very high volume selling day, and we are closing way below the lower Bollinger Band, which means we are extremely oversold in the short term and could be due for a bounce. This is clearly the capitulation in Tesla stock that we were looking for, and we sliced right through that price target at 186.5 and 179.8. The next strong support level and price target is going to be down here just below 173. And I do think if Tesla gets there tomorrow, we are going to see a very powerful bounce from that level. So when you get high volume selling, you're very likely seeing some type of capitulation, which means you want to buy when there's blood in the streets and you don't want to be trying to short something that's already this oversold. So there is a great long risk reward ratio as we approach this support at 173. But obviously this is still a falling knife scenario, so you still need to be very careful and make sure you're managing your risk. Now, if we do get a bounce, we'll still be looking for resistance around 187, and we still do have that gap to fill at 196.6. And above that, we have the resistance trend line, which could take us all the way up into the 200s. So be careful on Tesla, but don't be afraid to accumulate this stock if you are a long-term bull, because these are the times you want to be buying stocks when everybody is panic selling them, and you could get the shares at a great discount. On Apple stock, we were down 3.32% today as we're getting very close to our downside price target, which is this gap fill at 133. And if we break through that gap and continue lower, we're going to be looking for the support at 130. From there, I do expect to see a counter trend rally to go fill the gap to the upside at 145. So I continue to tell you, as we're getting this high volume selling in these big tech companies, this is usually going to be a time to accumulate as an investor and consider taking on some risk as a long trader. Even though we are in downtrends, these risk reward ratios are becoming attractive for long trades. So look for that downside price target at 133 and 130, and then the upside potential could take us all the way back up to fill the gap at 145. On the financials, we were down 1.68% as we are seeing a continuation of that rejection from this negatively sloping 200 simple moving average and resistance zone just below 35. We have the bull trend, so don't expect the financials to just roll over and die, because there's going to be plenty of support below. On the industrials, we were down 1.39% today, getting a pullback back down to the 5 EMA, and overall we're still in a bull trend. So like I just said with the financials, even though we are seeing a pullback, don't expect to see this rolling over and dying just yet. On the healthcare sector, we were down 1.08%, getting a pullback from the resistance at 134, but overall we are also still in a bull trend in the healthcare sector. On the energy sector, we were down 4.89% today, getting a high volume rejection from this resistance level breakout at 92, and we're coming right back down towards this support level, which is going to be right around 87 to 88. You can stay bullish above 87, but below that you need to get more risk off for a retest of 84, which is going to be the strong support level. So jumping back over to the S&P 500, without a doubt the CPI data tomorrow is going to be a very critical catalyst, and it is going to lead to a very large move in the markets. And right now the bears are still in full control. I already laid out exactly what the bulls have to prove to tell us that they're taking back over control of this market. But right now it is very clear that we are looking for lower highs and lower lows while we are still in a bear market. Don't bother going against the trend until the bulls prove there is reason to do so, or you are going to have a very bad time. Use great risk management, be patient, and stay disciplined, because this is still a very volatile market. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you'll get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.